Okay, steady 100-point gain on the Nifty. It's what we have, 17,980 right now. Let's talk about Godrej Consumers numbers. Second quarter earnings were a mild miss. Revenues came in line with expectations though. Volumes were lower. Samir Shah is Chief Financial Officer of the company. He's joining us to talk about the earnings and the outlook ahead. Samir, great to have you here. Thanks very much. Prashant this side. Let's start with the gross margins, which are near a 36-quarter low. Could you tell us what levers you have to protect margins going forward, and if you can leave us with some outlook on where they will settle at?
Good morning, Prashant, and thanks for having me on the show. I think if we double-click into the margins compression in Q2 and in India, around 3/4 of it is led by increase in palm oil, which in turn impacts the personal wash portfolio, and rest is impacted by crude and basket of chemicals. What we have done is we have been taking calibrated price increases. If you look at India's Q2 performance, around 5% was volume driven and 5% was pricing led. We have taken some bolder price increases, which will get into the market somewhere late December, early Jan. By then, we expect some of these price increases to mitigate the inflationary impact and the overall operating margins to come at parity over the next couple of months.
Samir, hi, good morning. So, if you can just tell us a little bit about what the outlook is for the remainder part of the year, both in terms of the margin pressures and how you're managing them, and also in terms of revenue growth, what are you looking at?
Sonia, we expect our double-digit growth momentum to continue, for rest of the year, which is a good place to be in. If you look at our first half performance, we have been plus 10% growth, and we expect the same momentum to continue for rest of the year also. In very short term, we could see some margin compression because the price increases will flow in with a lag of month or two. But post that, we should see margins maintenance. So my sense is for rest of the year, it could be mixed. In very short term, some margin compression, and then the margins should start expanding.
Samir, good morning. So on the sort of the pricing front, what is the quantum of the price hike that you took in Q2 and so far in Q3? And what's the impact? Are you noticing any change in customer behavior, preferences, any down trading? How's this playing out?
Good morning, Surabhi. So the quantum of price increase which we took in Q2 was around 5%. My sense is for rest of the year, the price increase would be around 10 to 11%. We don't expect any material impact on demand because we are looking at staples. These are price points of rupee 10, rupee 20, rupee 30, wherein either a plain vanilla price increase or grammage reduction has been factored in. So we don't expect, for staples, the consumption to go down. And also it's a low ticket purchase. From end consumer perspective, this price increases also will be gradual and calibrated in nature. So to that extent, at this point in time, we don't expect any consumption impact because of the pricing change.
Can you tell us a little bit about the growth that you're seeing across segments, and where do you see the maximum growth potential coming from? Household insecticides, hair colors, soaps, because there was of course some amount of pent up demand that has come through, but now that things have normalized, where do you see maximum traction?
The growth has been broad-based for us, Sonia. If you look at our performance for first half of the year between home care as well as personal care, the growth has been pretty broad-based. We see growth opportunities in household insecticides as well as hair colors because these are relatively under-penetrated categories. There is opportunity for premiumization over here. We also see a steady volume and a big price-led growth opportunity in personal wash portfolio, and not just soaps but also the hygiene portfolio, which has also settled in pretty well. So we expect growths to come in from most of our core categories and a broad-based growth.
Speaking of growth, Samir, what about geographies beyond India? Places like Indonesia and others where top-line growth has been elusive. Indonesia, for instance, are you hoping to start growing maybe this year itself, Q3, Q4, or will it take longer than that?
Yeah, so our international business performance has been mixed. On one hand, we have Indonesia, which has seen, a soft performance. And on the other hand, we have Africa, US, and Middle East cluster, which has seen very strong performance. Coming to Indonesia, they are, witnessing very tough macro conditions. If you look at some of the companies who are listed within FMCG space, they have been degrowing in mid to high single digits. Having said that, our performance, which has been flattish, is relatively not a bad place to be in. Though we are, not very happy with the overall business performance in Indonesia, we do believe that there can be, more building blocks in place to accelerate the growth over there. So we should see at least the business in positive growth zone in rest of the year. And from F23, we will see business going back to its high single digits to low double digits in growth momentum with all the building blocks which we are putting in place at this point in time.
Okay, well, thanks a lot for that, Samir. All the best. Let's take a look at the financials of Godrej Consumer. The past financials of the company will come up for you. It has been a very, very strong performer in the last many years. As you can see with that graph on your screen, the revenue growth, even in a bad year, has been solid for them. The EBITDA performance of Godrej Consumers, they've held on to their margins despite all the raw material cost pressures. And finally, on your screen, this is the profit performance of the last few years. Let's slip into a short break, but up next,